Welcome back to the Prajna series. In this episode, Rajesh V. George will focus on GSTR 3B returns, a critical summary return for GST filers. He will walk us through the structure of the form and section-wise reporting requirements.
I think we have understood GSTR 1, GSTR 1A, as I was telling you, IMS, and you have GSTR 2A, 2B. We understood the flow of data. We also understood, as per the provisions of law, what is there. What are the various tables in these GSTR 1, 2A, 2B? We have already done that. The next limb or the next return or the return that is filed by a normal taxpayer is a GSTR 3B. So let us try to understand a little bit about the GSTR 3B. Now, before I tell you about the flow of data in the returns of a GSTR 3B, in GSTR 3B. From where does it flow? It auto flows from the GSTR 1, it auto flows from GSTR 1, it auto flows from the GSTR 2B also. Now, section 39. Section 39 read with Rule 61. Rule 61 is a provision and Rule 61A is a provision which talks to you about, if you want to read in detail about GSTR 3B, it is provided under these provisions. Now, who is to file a GSTR 3B? If you recall what I told you about GSTR 1, it is not a normal taxpayer the law doesn't say it is a normal taxpayer. It says that taxpayers other than NC no ITC is what you will remember. So it will tell you that other than a composition levy person, a non-resident person, an OIDR person, an input service distributor, a TDS or a TCS, or any other registered persons has to file a GSTR 3B. Now, I think there is a little overflow in the slides with reference to this one. Please bear with me. I think there is a screen adjustment that is not due to some problem in the screen adjustments. But now once you tell that who needs to file a GSTR 3B, the next question is, what is the periodicity of the GSTR 3B? 1/1/2021, you will remember that there was a scheme which was introduced which is called as a quarterly return monthly payment scheme. I will be talking to you about after we explain this GSTR 3B. I'll come back to what is a quarterly return monthly payment. Suffice it to tell that till 31/12/2020, despite the fact, if you recall the GSTR 1, if the turnover was less than 1.5 crores, GSTR 1 option to file quarterly GSTR 1 was very much available in respect of taxpayers who were filing whose turnover was less than 1.5 crores. But with reference to 3B, the quarterly option was not available to these quarterly GSTR 1 filers. The GSTR 3B always till 31/12/2020 had to be a monthly GSTR 3B. From 1/1/2021, if the turnover is greater than 5 crore rupees, it is a monthly GSTR 1, monthly GSTR 3B mandatorily, and it is an option available to the registered person. If he wants to file a quarterly GSTR 3B, also it is possible if the turnover is up to 5 crore rupees. Now, what is the due date that is available? If it is monthly, it is 20th of the following month. So if it is for April 2025, it will be May 20th of 2025. If it is a quarterly GSTR 3B for Jan to March 2025, it has to be filed either on the 22nd or 24th, because certain states have required to be, taxpayers in certain states have to file it on 22nd, and certain taxpayers in certain states it is 24th. So they have been designated which states will file on 22nd and 24th. So that is the due date with reference to the 3B. What does it actually contain? The 3B, actually it contains the details of outward supplies. It has the details of inward supplies. It has details liable to reverse charge, the input tax credit, and also the payment of tax details is available. Is it possible to rectify an error? It is very much possible. Similar to the GSTR 1, you can rectify an error, or if you have missed out making an entry, you can always add it there. But only condition is that it has for 21/22 onwards, the available amendment date is 30th of November of the next financial year. If it is till 2021, it is furnishing of September GSTR 3B for due date of September GSTR 3B. What is the value of this one? Now, if you remember the documents that I was talking to you about, if you remember the documents that I was talking to you about, all the data pertaining to these documents we fitted into the GSTR 1. Now, actually, it is possible to arrive to conclude as to what is the taxable value or the tax pertaining to the value of the taxable supplies based on the documents that are there. It is actually the value of invoices plus value of debit notes minus the value of the credit notes plus the advances received and minus the advances adjusted. What do you mean by that? If you remember the invoices, if I were to just translate this into a table, if it is details of the invoices, what were there in the invoices? The invoices had forward charge. The invoice entry was forward charge. In forward charge, which tables were available? 6B, 6C, 4A. In forward charge, it is for a registered person. If it is to an unregistered person, it was table 5 and table 7. Similarly, you need to take into consideration 9A, and you need to take into consideration here with reference to table 9A here for table 5 and table 7. What am I trying to tell you here is a fact that when you say value of invoices, you also have to calculate or take into consideration the impact of the amendments pertaining to those invoices which have been amended. What do you mean? An amendment can result in an increase in liability, it can result in a decrease in liability, it can also result in there is no change. So if you were to just calculate the liability or the value of the taxable supplies based on the documents, it will be the data pertaining to these particular tables which get reflected here. If it is to debit note, all the debit notes which have been entered in table 9B along with the amendments to the debit notes that are there. Credit notes will be again from table 9B, which also is reflected there, amendment in 9C. Value of advances received is shown under table 11A, advances adjusted is shown under table 11B. Now, this is what, if you were to just translate it from the table in the R1, I'm just trying to give you that understanding. We'll talk about this when we look at the actual table that is there in the R3B. Okay. Now, in what circumstances, if you remember when I was telling you about GSTR 1, in what circumstances GSTR 3B is not allowed to be filed? If the previous 3B is not filed, that is, if the 3B of March 2025 is not filed, April 3B cannot be filed. Is it liable if something that a taxpayer does in the 3B, will it render him liable for cancellation? His registration can be cancelled? Yes, if he has not filed his 3B for 6 months or 2 quarters, his registration is liable for cancellation. Now, this is the brief understanding of 3B, rule section 39(1) read with rule 61(a). Now, before I get into what actually comes into the 3B, the various tables as to how it auto-populates, just let us touch upon what is called as the quarterly returns monthly payment scheme. Now, as the name suggests, the return is filed quarterly, but the payment of tax happens monthly. That means there is a quarterly GSTR 1 and a quarterly GSTR 3B, but the payment of taxes has to happen monthly. How does it happen monthly? There are 2 methods in which it can happen monthly. This is available, this particular option is available to the taxpayer from 1/1/2021. The taxpayer has to opt into the quarterly QRMP scheme. Now, what is the return status? It is a little jumbled, please bear with me, but I have already explained to you up to 1.5 crores, greater than 1.5 crores. For GSTR 1, it is a monthly and a quarterly option that is available, whereas from 1/1/2021, it will be up to 5 crores and greater than 5 crores. Now, this is the option. How does the taxpayer, when does he exercise his option to get into the QRMP scheme? If he is doing it for a particular quarter, if you were to just visualize this particular entry, if it is quarter 1, that is April to June 2025, April to June 2025, if he wants to, for this particular period, his turnover is less than 5 crores, he wants to move into filing a quarterly, he wants to move into the QRMP scheme. Now, for him to do it, he has to exercise his option within these 2 dates. That is between 1st of February 2025 to 30th of April 2025. If he exercises the option that in respect of quarter 1 onwards, he wants to shift into the quarterly return payment, monthly payment scheme, then he has to do it within this particular date. Similarly, for quarter 2, it has to be done between 1st of May 2025. If it is this particular financial year, it is 1st of May 2025 to 31st of July 25. Quarter 3 and quarter 4, these are the respective dates in which he has to exercise this option. The exercising the option also happens on the GST portal, wherein the taxpayer now has the option. He goes here monthly, quarterly, he can choose whichever he wants, and he has to do it within this particular cutoff date. And when he clicks on save, it now enables the taxpayer to go into filing a quarterly GSTR 1 and a quarterly GSTR 3B. Now, I want to tell you about, when you say quarterly return, monthly payment, it has two limbs. One is the quarterly returns, so the quarterly GSTR 1 that is filed. You have next part that is there, which is actually the monthly payment. What do you mean by a monthly payment? There are two parts, two ways that monthly payment is achieved. The monthly payment is achieved by two ways. One is called, as you clearly see here, it is called as a fixed sum method, and the second one is called as a self-assessment method. Now, let me just tell you what the self-assessment method is, the easier of the two. So, let me tell you what the self-assessment method is. What is a self-assessment method? I'll put it to you on the board also, but just try to visualize what I'm saying. Now, if you are telling, first of all, monthly payment, that means monthly payment arises in which months of the quarter? Now, if you are taking the quarter as Jan 25 to March 25, the monthly payment happens in the month of Jan 25 and for the month of February 2025. Now, in the month of Jan, if the liability is 1 lakh rupees, if the liability is 1 lakh rupees and the input tax credit is 80,000 rupees, what the taxpayer now needs to do is to achieve or to satisfy the condition of monthly payment. What the taxpayer needs to do is, before 25th of February 2025, that is for January, before 25th of February 2025, the taxpayer has to generate a challan for 20,000 rupees. That is, he pays into his cash ledger by generating the challan for 20,000 and pays it. When he pays it, it comes into the cash ledger. It satisfies the condition of monthly payment. In case he does not do it on 25/2, he does it on 26/2 or he does it on 30/2, whichever date that he does. That means from the period from 25 onwards, interest is chargeable for it. So this is a condition which says monthly payment. So if it is February 2005, if the liability is 10,000 rupees, input tax credit is 5,000 rupees, he has to generate a challan for 5,000 rupees. And he has to deposit this challan on or before 25/3/2025. So it satisfies the condition of monthly payment. So that is what is called as a self-assessment. The return prior to Jan 2025 could have been a monthly GSTR 1, that is, he was filing a monthly GSTR 1, he opted into the QRMP for the quarter January to March 2025. That is what has happened. Or the previous GSTR 1 also was quarterly. The previous to a GSTR 1, there are two options that is possible. One is that it could be a monthly GSTR 1. The second is that it could be a quarterly GSTR 1. Now, if it is a monthly GSTR 1, and if in this particular example, it will be December 2024. If it is a monthly GSTR 1, in the month of December 2024, the monthly return, that is a monthly GSTR 3B, December 2024 3B, the taxpayer just needs to look at how much is the cash deposit that he has made. There are two possibilities that are there. The cash deposit, that is, how much amount he has paid from the cash ledger, or the cash amount, how much he has paid from the cash ledger. Now, if he has, there could be a possibility that he has not paid anything, or he has paid 100. Or it could be 10,000, or it could be 1 lakh, or it could be whatever amount that he has paid through the cash ledger. That is the amount that he has paid. Here, he has not paid anything. It is 0. Now, to satisfy the monthly payment as per the fixed sum method, in Jan 2025, he needs to deposit. If it is 0, he doesn't have to deposit anything, nothing required. If it is 100, he has to deposit 100 rupees. If he deposits 100 rupees, it satisfies the condition of monthly payment, which is under the QRMP scheme, the fixed sum method. Now visualize this. The previous quarter GSTR 3B is actually October to December 2024. Now in October to December 2024, again the possibility, we'll take this same example, it could be either 0 or 100. It could be either 0 or 100. If it is 0, again it is nothing needs to be paid. If it is 100, for the month of January, if it is 0, it is nothing. If it is 100, to satisfy the condition of monthly payment as per the fixed sum method, he just needs to deposit 35% of whatever he paid in the previous, that is 100, that is 35 rupees. In the month of February, as usual, it is 0 because if it was 0, and in the month of February, he needs to deposit 35 rupees. If this deposit happens on or before 25th of February or 25th of March, he satisfies the condition of monthly payment of tax. Now these are the two different options available, fixed sum method and the self-assessment method. Anyway, this slide makes it a little more clearer, but now if you were to have this particular example, this example tells you what I was explaining to you. You need to remember, whenever it is the tax, you always have the IGST, CGST, SGST, and you have a cess component also. Now if it was a previous GSTR 3B, was a quarterly GSTR 3B for January, and the amount paid in that is 100, 100, 550. To satisfy the monthly payment condition in April and May, 35%, which is 35, 175 and 17.5, if it is paid or a challan is deposited, it satisfies the condition of monthly payment. If it was a monthly return, that is the previous one was March 2021, the previous GSTR 3B was a monthly GSTR 3B for March 2021. If the amount deposited or the amount paid through cash was 50, 50 and 80, then to satisfy the condition of monthly payment in April and May of 2021, he has to deposit 50, 50, 80. The due date is, if it was April, 25th of May. If it was for May, it is 25th of June. This satisfies the condition of monthly payment. That is quarterly returns, monthly payment for you. And now there's an additional fact that you need to remember. The QRMP brought in one more aspect, which is called as the invoice furnishing facility. Now, let me explain this on this particular slide itself, because instead of using the board, it becomes easier for you to visualize what I'm trying to say. Now, look at this particular one. Why was the requirement of an invoice furnishing facility? Let's look at it from this perspective that, if you remember what I told you at the beginning, if the turnover was less than 1.5 crores, a taxpayer till 31/12/2020 had the option to file quarterly GSTR 1. So let us now take a quarterly GSTR 1. Let's take in a 31/12/2020. So I'll take the typical example, October 2020 to December 2020. The R1 for this particular period was being done. Now what happens is, because the R1 pertains to a quarter, the R2A also was getting populated only at the end of the quarter. That is, supplies received in October and November, also the input tax credit was being available only in January. So now what happened is, many taxpayers who were recipients were actually monthly return filers. They had to file monthly returns, but the credit was accruing only on a quarterly basis to these particular recipients. To set right this, or the request or the trade, the concerns of the trade to put in place a system to address the concerns of the trade, what was brought in was, along with the QRMP, is that there was an option which was given called as an invoice furnishing facility. Okay, invoice furnishing facility. Now, what is an invoice furnishing facility? An invoice furnishing facility is that instead of filing the GSTR 1 on a monthly basis, take out only those tables which are supplies to a registered person. Which are those tables? Those tables will be 4A, 4B, 6B, 6C. Those are to a registered person. That is made available so that once a taxpayer now, if he were to now file, let's say from 1/1/2021, in the month of Jan 2021, if he files the supplies made during Jan 2021 pertaining to a registered person, if it is entered here, now what happens is it goes and falls into the 2A of Jan 2021. So the credit is available immediately. So the invoice furnishing facility, if the invoice furnishing facility were to make available all the tables in GSTR 1, it defeats the purpose of having a quarterly GSTR 1. So only those tables which would impact the input tax credit, which is actually 4A, 4B, 6B, 6C. If you see unregistered person tables, table 5, table 7 is not there. Advances received is not there. So only those tables which will impact the credit, that is supplies to another registered person, 4A, 4B, 6B, 6C, 9B, and supplies under section 9.5. That is, the aggregator is entering those details, along with the amending entries which are in 9A, 9C, and 15A is made available in table in the invoice furnishing facility. So basically what you need to remember with reference to an invoice furnishing facility is the fact that it is made available to quarterly GSTR 1 filers, so that if they enter it in the first 2 months of the quarter of any quarter, the credit pertaining to those supplies are received, or the recipient is eligible to take input tax credit in the subsequent month itself. So that is the invoice furnishing facility for you. Now let's come to the flow of data in the GSTR 3B. I think we coming towards the end of the flow of data. The last part is some bit of the data flows into the GSTR 9. We'll come to that particular aspect. Now let's understand the flow of data in the GSTR 3B. Now what you see here, the GSTR 3B basically has these 6 tables. It also the 6 tabs that are there. Now what you see here, this is the tax on the outward supplies. It is the tax on the outward supplies that is there. Now here what do you feel? Where does the data flow in respect of the liability which it can auto flow from? It can auto flow from the R1 filed by the suppliers. That is same. If Rajesh is filing the GSTR 1, based on the various tables, the liability as per the tables in the GSTR 1, the liability is computed here. It can happen there. In addition, it can also happen from the R1 which is filed. Now in this is the self R1. That is your own R1, whatever is a liability, it can fall from the GSTR 1 of my own GSTR 1. In addition, it also come from the GSTR 1 of the suppliers where it is chargeable to reverse charge. So that is also liability. Where does it come? It comes under GSTR 2B. It comes under GSTR 2B. Now in GSTR 2B, which table? 3, if you remember, 3.3. I told you that 3.3 will auto-populate into 3.1D of the 3.1. This is 3.1. In that sub-table, sub-reference, 3.1D, it will auto-populate. So it flows from here. Now supplies notified under section 9.5. If you recall table 14 and table 15 of the GSTR 1, it flows from here. 14, the supplier reflects. 15, the aggregator reflects. Now, interstate supplies, this is a subset of an entry here in this particular table. It is only for reporting purposes. To ensure that there is more compliance to ensure that the consuming states get the benefit of the taxes paid. So the interstate supplies are only those details pertaining to B2C supplies. Supplies from supplies to a composition levy person and to a UN body. That is what will be in 3.2. The eligible ITC, if you see here, this will come from the R2B. The exempt, nil rated, non-GST, this is the first user entry that comes in. Interest, based on whatever is the time limit within which the tax is paid, the interest and all is calculated and it comes auto-populates there. Now, let us try to understand each of these tables with reference to the data flow. You have what is 3B already in your mind, who needs to file, periodicity, the IFF and all that is there in that particular table. Yeah. Now, let us try to understand what is 3.1. I think this is the crux of whatever we have learned till now, that whether the table references which are there in GSTR1, as I told you, that has to auto-populate from the GSTR1 that is filed by me, that is my own GSTR1. That is, if Rajesh has filed a GSTR1 for April 2025, the data that is entered in the various tables has to auto-populate in these tables, in this particular sub 1, A, B, C, D, E. Except that D will auto-populate from, my 2B. The others will auto-populate from my R1. That is what we need to remember. So let us try to, I would love to ask you actually your understanding or your memory with reference to the tables that are there. Unfortunately, I don't have an audience to ask that. So I will just get into that part as to from which tables actually these entries are auto-populating, from the R1 or from the R2B. Okay. Now, come, if I were to ask you, if you were to look at the screen and ask you, which is the easiest subcategory that is there, or which table is easy for me to remember based on which, from the R1, which will actually auto-populate here, R1 or R2B. Since we are talking about R2B, let me just take out that R2B first. If you see here, inward supply is liable to reverse charge. Inward supply is liable to reverse charge. Now here is where I want, okay, before I talk to you about the reverse charge, because it also involves a user entry. Why it involves a user entry, I will come to it. So I'll keep it for the last. Which is easier for me to remember? I would say that it is C and D. I would say it is C and D. Why do it is one? It is nothing but nil rated, exempted, non-GST. It is nothing but table 8A to 8D of my GSTR1. 8A to 8D of my GSTR1. Correct? Now, what is the next which I can respond? This one I'm going to come last. This I'm going to come last. Now, what is the next easiest that I can remember is outward taxable supplies which are zero rated. Now, what is zero rated? Zero rated has two components. One is exports, the other is supplies to an SEZ. Despite the fact that, all along SEZ we put it under the registered person category, but SEZ is actually a zero rated supply. Now, exports is outside India. If you remember the picture that was actually built for you, within India, outside India, our exports was under table 6A of your GSTR1. 6A of your GSTR1. Now, the amendments to 6A happened in table 9A. Every time you will remember the document from that perspective: invoice, credit note, debit note. Invoice, credit note, debit note. In that order itself, you'll remember. So if it is 6A is invoice, the amendment to those invoice-wise entry happened in table 9A. Credit note details and debit note details were in table 9B. Amendment to that happened in 9C. I just hope you are remembering and that memory serves you, that you are able to recall. Now, what SEZ will be which table? If you recall, it is within India, forward charge to a registered person. In registered person, you wanted a subcategory which is SEZ, that was table 6B. Amendment 9A. Credit note, debit note 9B. Amendment 9C. Now, go to the next part before I do the reverse charge. Go to the reverse charge, and other than the reverse charge, this is outward taxable supplies other than zero rated, other than nil rated, and non-GST outward supplies. Correct? That is what it tells you about. So now visualize the picture that is there. Supply within India. So now you have the supply. Let me use that particular picture itself. So I say this is within India, and I said forward charge. Correct? In respect of this forward charge, I told to a registered person. Now, in a registered person, I wanted to identify SEZ as my first one, which I've already shown it here. So it will not be there. What is the next part that is there? It is deemed exports. Deemed exports is under which table? 6C. Amendments to deemed export. Now, when you say 6C, you will have to always remember the document is invoice-wise entry. If it is invoice-wise entry, the amendment will happen in table 9A. If there is an invoice that has been issued, there is a possibility that there could be a debit note or a credit note. The debit note or the credit note is entered in table 9B. Amendment happens in 9C. Registered person, the next one is others. In others, it will be under table 4A, amendment under the same 9A, 9B, and 9C. Forward charge, registered person. You have the next part, which is the unregistered person. In unregistered person, if you recall, you had B2C large. B2C large was invoice-wise entry, which was shown under table 5. Because it was invoice-wise entry, amendment happens in 9A, debit note happens in 9B and amendment in 9C. Unregistered person had B2C large, then it will be others. The others entry was, so if you recall, it was a summary of place of supply wise, rate wise, and that was reflected in table 7. Any amendment in 10, amendment was done in 10, and 7 was a net off figure. I'm sure you'll remember this. I hope you remember. At least it serves the purpose for me having spoken for so many hours. Okay, now go forward with this. Do you think it covers the entire thing? Most likely what happens is we tend to forget the advances received. So it also has to include, along with this, you have to have the advances received and you have to subtract the advances adjusted. That auto populates here along with whatever amendments, plus the amendments. Now this completes the auto population that is there with reference to the GSTR 3B 3.1A. Now I want to spend a little more time with reference to 3.1D because I just want you to visualize this now. 3.1D is with reference to reverse charge. It is with reference to reverse charge. When you say reverse charge, now I think you need to start thinking about what are the possible reverse charge that I also spoke to you about. I spoke to you about section 9.3 and section 9.4. I did tell you about 9.3 and section 9.4. Section 9.3, you will just remember all specified goods and or services. I'll give you the notification number. It is actually 13 of 2017 CTR. With reference to services, If it is with reference to goods, I think it is 4 of 2017. So this will be goods, this will be for services. Now, if you remember, 9.3 specified goods or services from a registered person, whereas 9.4 is actually from an unregistered person. 9.4 is from an unregistered person. Now, there is one more category of reverse charge, which is actually, I'm sure all of you are familiar with it. It is actually import of service. Now, what we understood till now is a fact that all the tables that were there till now is auto-populating from the GSTR 1. Whereas, there is no document or there is no form or return which can capture from an unregistered person an import of service. So what happens with reference to 3.1D, that is 3.1D? What happens with reference to 3.1D is it auto-populates from, first it auto-populates whatever is there in 3.3 of 2B, that is GSTR 2B. It auto-populates from 3.3 of GSTR 2B, and in addition to that, it also now requires a user entry for this. Now, actually, this is the first user entry that is coming in from into the GSTR 3B. Now, you have to visualize this. Till date, or from January 2025, it was expected. I'll tell you what was expected, and I'll tell you what is the practice that is followed. Despite the fact, or the challenges that as a departmental officer that we will come across is the fact that, despite the fact that the information pertaining to 3.1A, B, C, and E, and for that matter D, gets auto-populated from GSTR 1 and the GSTR 2B, all these entries that you see here, 6,67,000, 97,650, can be edited by the taxpayer, by the registered person. Now, because of which what happened is, if the GSTR 1 threw a liability of 1 crore, the taxpayer could edit it, could keep it at 1 crore, could edit it and make it 0, could make it at 1 lakh or 10 lakhs or whatever he wanted. Now, because of which it also resulted in a GSTR 1, GSTR 3B mismatch. It's a huge challenge. I think I think we have spent about 8 years trying to curb this particular aspect. So what that is when if you recall, what did I tell you about the GSTR 1A coming in? It comes in from August 2024. The purpose of the GSTR 1A, one of the reasons. Now, one of the concerns of the trade also you need to visualize. One of the concerns of the trade also that you need to visualize is the fact prior to August 2024. Prior to August 2024, when the R1A was not there, you need to visualize what is the scenario is. If I have made a mistake in my R1 and in the R1, now let's visualize this. In the R1, I showed a particular entry as 1 crore, whereas it is 1 lakh. I made a mistake in 1 crore and it became, instead of 1 lakh, I showed it as 1 crore. Now what happens is, when it auto-populates into 3.18, it came and auto-populated as 1 crore. Now is a taxpayer allowed to edit his R1? He can edit it only in the subsequent month. So what happened is, the constraint available to him or the challenge available to him was that he had to amend the entry that was auto-populated in GSTR 3B. See, this is a genuine mistake. There is also, it also actually facilitated people without making a mistake trying to make an amendment, ensuring that you to pay lesser taxes. Now, that is one of the reasons why GSTR 1A comes in. Now, in a circumstance where instead of 1 lakh rupees, taxpayer has shown it as 1 crore and it auto-populated 1 crore in the 3.1A or any of these tables that was there, the option available for the taxpayer or the registered person was that before he files the 3B, he can go and file his GSTR 1A, thereby amending the entry from 1 crore to 1 lakh. Now, GSTN, the GST portal one, they took a view, or somewhere there was an advisory that was issued in October 2024 that whatever data auto-populates from GSTR 1 and GSTR 1A will not be allowed to be edited. That is, it would be hard-coded. And the time frame that was given was that, from January 2025, if at all a taxpayer wants to edit his 3B, the option available to him was by revising the GSTR 1 through a GSTR 1A. But for whatever reasons, despite the fact that January 2025 was given as a cutoff date for the hard coding, as of now, it is not hard coded. The option to edit is still available. But going forward, if that hard coding happens and there is no edit option of the 3B happens, I think there will be a substantial reduction with reference to these edit and I wouldn't say fake invoice or anything. I would say that the mismatches between an R1 and a 3B will be almost negligible. Going forward, it is expected that it will happen with reference to the input tax credit table also, which I'm going to talk to you about the next part of it. So here, what I'm trying to make you understand are two things. The first fact is that if I have made a mistake in my R1, why the edit option was made available is the fact that you have made an R1, you have made an entry mistake in the R1. Instead of 1 lakh, you have showed 1 crore. Now, in that particular circumstance, the taxpayer had no other option because he was not going to pay 1 crore rupees. He would pay only 1 lakh rupees. He had no other option but to edit. So what was the facility that was provided? Okay, the GSTR 1A facility was provided. Before the taxpayer went and filed his GSTR 3B, he could file his GSTR 1A, and resulting in that particular aspect, it would reduce the auto-population based on the rectified entry in R1A would auto-populate. That is one thing that you need to remember. The second part that you need to remember is the fact that with reverse charge entries that are there, it flows from table 3.3 of your GSTR 2B. It is not that the amount is fixed amount, because there is reverse charge that can accrue from supplies from an unregistered person and even with reference to import of service. So this will have a user entry. So there has to be a user entry here, 3.1D. If there is no unregistered person supplies and import of service supplies, whatever is in 3.3 will remain. So that is with reference to the liability table that is there in your GSTR 3B. We talk about the most important table that is there with reference to the input tax credit as the next part. Now, your input tax credit, I just want to spend a little more time with reference to the input tax credit, because the table which is table 4. Now, before I get into 3.1, the input tax credit, the screen is telling me that, okay, there's one thing that I missed out. Here is where you need to remember there is another table which is inserted, 3.1.1. 3.1.1 is not available from July 2017. I think it comes in somewhere in 2022. Now, you have that component, you remember the supplies through an aggregator where the aggregator needs to pay the taxes. Now, this comes from table 15 of the aggregator. This comes from the suppliers table 14 of the GSTR 1. 14 along with 14A. You need to remember it will flow from 14B. That is where the aggregator pays tax. The 14A pertains to the aggregator collecting tax. So it will be here 14A and this will be 14AB. So this will be table 15. It auto-populates from those respective tables in your GSTR 1. Now 3.2 is something that I told you. If you read this, if you just go back here, 3.1A is outward taxable supplies other than zero rated, nil rated and exempted. It is now flowing from this particular table, and now 3.2 is a subset of 3.1A and a subset of 3.1.1.1. It's a subset of this. That means this is only for a reporting purpose, and it only pertains to out of the 3.1A and 3.1.11. The taxpayer, when he reports also, the details are correct, and it ensures that the respective consuming states get the benefit of the taxes paid. Now, there is a circular which is also issued that says that, if there is an incorrect entry here that is made in table 3.2, you can penalize him under, I think, section 125. So this is with reference. I do not want to spend too much of time on this. This is basically a reporting entry that is there. It has three components. You will have to visualize that this table is a subset of 3.1A and with reference to 3.1.1 under that subcategory 1. Supplies made to unregistered person, supplies made to composition taxable person, and supplies made to UN holders. So it is a reporting information that comes here. This is already a part of the liability that is there in 3.1A and 3.1.1. Now here is where I want to spend a little time here with reference to my PPT was a colorful PPT, but due to constraints I have to use a black and white, so the colors may not be visible, but basically I think what I am trying to say will actually communicate. Now here is where you want to remember that this table 4 has, there are two periods in time. There is a difference between what is there in table 4 till 17/7/2022 and the table 4 after from 18/7/2022. Let's talk about table 4 from 17/7/2022. Now, if you remember, table 4 pertains to input tax credit. It tells you that eligible ITC. Now, I think I will use the pen here. Okay, now, if you look at this, it is first applicable till this particular table is till 17/7/2022. Now, this again, if you see, it has 4 different parts. First part is that there is ITC available. Under that, there are 1, 2, 3, 4, 5 ITC reversed, and then you have net ITC available, which is nothing but A minus B. And then you have a category which is ineligible ITC. Let us try to understand what actually comes here. Now you need to remember data has to auto-populate. And where is the user entry coming, and because of which, somewhere going forward, whatever is hard-coded based on the, whatever is the auto-populated entry will be hard-coded. Going forward, taxpayer has to also have to take that care to ensure that the GSTR 1, 2A, 2B or GSTR 1A and all is correct. Only then whatever data is entered here does not, edit option will not be available. Now, if you recall this particular one, first thing that I want you to remember is it auto-populates from GSTR 2B. Now, if you recall the GSTR 2B, that is available was there, not available was there, and then you have 37A. Now, whatever you see here is actually from the available tab of the GSTR 2B. Now, import of goods, if you remember, was part D of your GSTR 2A, and it was actually 3, 4 of your 2B. it was 3-4 of your 2B. Similarly, if you remember, the input service distributor actually came in from 3-2. All other ITC other than that came in from 3-1. If you remember, 3-1 was nothing but, or it was same as part A of your GSTR 2A. And where did part A and 3-1 come in from? It came in from table 6B, 6C, 4A, 4B, or 6B, 6C, 4A, and the amendment entry in 9A, the debit note, credit note in table 9B, amendment entry in 9C. That is where it came in from. Now, if you remember this, inward supply is liable to reverse charge. It came from the 2B and it was 3-3. It was 3-3. Now, 3-3 created a liability, already I explained in 3.1D. Along with that, there was a user entry that pertaining to unregistered person reverse charge and also import of service. So, this import of service is now here, which is there, serial number 2 or 4, that is 4A2. This becomes a user entry. This becomes a user entry. Now, this user entry, along with this portion which is auto-populating, can also include a user entry which is pertaining to reverse charge from an unregistered person. So these are the two user entries that comes into table 4. Now, come to the next part of it is, now that you've understood this, the ITC reversed. If you recall when I spoke to you about the documents that were there, let me tell you about the easier part and then go into 42, 43. If you remember, the document that I told you was, I told you that invoice, credit note, debit note. And what did I tell you about the impact of a credit note? I said that the liability of the supplier reduces. Credit note or debit note, always the supplier's credit note or supplier's debit note. Now, when the credit note, what it did was, the credit note reduced the liability of the supplier. It should also reduce the input tax credit of the recipient. So, what it does is, all credit note entries will come automatically under the reversal category, thus ensuring that the system is now trying to say that there is a credit note issued by a supplier. In respect of this, the credit that is available to the taxpayer has to be reduced to the extent of the credit note. What is the other reversal that is possible? The other reversal that is possible is Rule 42 and Rule 43, which pertains to proportionate credit taken in respect of taxable and exempted supplies. So proportionately for inputs and input services, it will be under 42, and for capital goods, it will be under 43. So the taxpayer needs to enter. This becomes a user entry. This becomes a user entry. I hope it is clear till now. This is again the major part. Wherever it is flowing from the 2B, I have already explained. Where there is a user entry, it comes here. Now look at the last part of it. It looks at, now this is what is called as ineligible ITC. I want to touch upon this because I want you to understand that due to various reasons, taxpayers follow different methods of reflecting information here. So I just want you to be aware that, okay, you come across this situation, it is possible that the taxpayer would have reflected it like this. It was done like there are two ways in which taxpayers did that. Now, what is ineligible ITC? As per section 17(5), blocked credit. Blocked credit. And any other ineligible ITC, it will come under others. So now what the taxpayers followed, there were different practices that were followed. Now you will have to visualize this particular practice. Now here, the example given here is 57,090. 57,090. Now let us assume that the block credit, because I am showing you the data reflect, how data is being reflected when you actually analyze, the GSTR 3Bs of the taxpayers. When you go for an audit or investigation, it is possible that it appears there is a mistake, but there may not be a mistake also, because the data reflection was there was a diverging practices with reference to that. Now, if I were to say the blocked credit in this particular month was 1,000. The block credit pertaining to this particular period in time was 1,000 rupees. Now, here, this has auto-populated, let us say from GSTR 2B, or it came in from 2A, whatever is there in during those periods of time. Now, there were two different methods in which taxpayers reflected this particular information. 57,090 was the total credit that was there. 1,000 rupees, after he receives the documents, he sees that they are covered under section 17.5 block credits. So what taxpayers did was that they did two different methods of reflecting. What they did is, first they retained 57,090 and they showed 1,000 rupees under others reversal. Effectively, his credit was 56,090. 57 minus 1,000. That was one way that people reflected. Okay? And second way that people reflected was the fact that people now showed, instead of showing this 57,090, he actually edited 57,090 and showed 56,090. He showed 56,090, that means he showed 56,090 and he put 1,000 rupees under this category. Because whatever is reflected in D does not go into the credit ledger. What is A minus B only goes into the credit ledger. That is what you need to remember. D is a reporting parameter, at least till 17/7/2022. Till 17/7/2022, it was a reporting parameter. So people followed diverging practice. People said, one is 57,090, 1,000 rupees, they showed it as reversal, and they didn't show, they may show 1,000 rupees here, or they left it at zero. Whichever way they wanted, they showed it like that. That is one way of reflecting. The second practice that people followed was, here itself they reduced the 1,000 rupees pertaining to the block credit, thus ensuring that it is 56,090. And reversal was already done here, built into this particular 56,090. Here now they showed that 1,000 rupees is the block credit, so that it matched with the 57,090. You may come across these two scenarios that are there. So I just wanted to tell you that there have been diverging practices that people have followed. I think this is what is the information that I wanted to share with reference to till 17/7/2022. I just want to also add the fact that when you talk from a documents perspective, this is where I want to, this is a distinction that slowly brings the change that goes into from 18/7/2022. What is the change that comes in from 18/7/2022? If you see table 5 from a documents perspective, only showed invoices and debit note. And credit notes was always shown here in this. That is, credit note documents pertaining documents were actually shown under 4B2 from a document perspective. Now, this changes from 18/7/2022. What is the change that happens? Let us try and understand that. Now, look at this table that is there. Try to visualize. I'm going back and forth with this. If you see the changes that are there, look at the table here. Whatever is in A remains the same from 18/7/2022. The change happens between B and D. Let's look at it. Can you see here? The B entry here, which was, if you recall what was there here, let me use the pen here. The B entry that was there, I think I'll mark it this side. Now, the B entry that was there, this actually had only 42 and 43. The 4B2, earlier one, had only 42 and 43. Now, if you recall 4D1, it was actually block credit under 17.5. That was what was reflected there. Now, there was, this is in, if you just read this, you will relate it to something. What will you relate it to? It is nothing but the not available part of your 2B. That is, ineligible ITC under section 16.4, ineligible ITC under section 16.4, and the place of supply ITC restricted due to place of supply rules. Now, this is a change that happens from 18/7/2022. Now, look at it from this perspective. Let us try to understand, let us now try to bring in, there is a concept. I think when you look at it from 18/7/2022, you will keep in mind that there is a circular which has been issued, circular number 170, I think it is. It is circular number 170. You will read the circular number 170 to understand more in detail, or if you have any doubts beyond what I am explaining, it is very clearly spelled out in the circular 170 with an example also. An illustration is also provided. You will have a look at that. So 170 is a circular. It is this one. I don't remember. I think it is 22. I don't remember the date. it is there. I think September or July, because I think the change comes in from 18 July, so it's somewhere around that particular period in time that the circular has been issued. So this is a circular that you will refer with reference to this change in the table 4 from 18/7/2022. Let me give you that understanding. Let me respond whatever is there in the changes in the law and the circular that is issued. I'll make you understand that. In case you want to refer, you go back to the circular. The first change that was there is the reversal component. Previously till 17/7 it was only 42 and 43. Now they brought in Rule 38 and they also brought in the block credit which was here into 17/5. That is the first change that they brought in. Now the second change that they brought in is, if you recall, the all other ITC was invoice plus debit note. Invoice plus debit note. Now what the change that they did here is that invoice plus debit note, they also included credit note here. If you recall, credit note was here till 17/7 from a document perspective. Now from 18/7/2022, they brought the documents, all the documents here, that is, if there was data pertaining to invoices, data pertaining to debit note, data pertaining to credit note, all those documents, data pertaining to those documents would get reflected in 4A5, except the fact that it will follow the thumb rule invoice plus debit note minus the credit note and auto-populate there. That is what it did. So there was no separate entry for credit note under reversal category. That is from 18/7/2022. When data is auto-populated, this is how data is auto-populated. I hope this is clear. Now, the next part of it, what it did. The system, the changes that brought in is, now what they did is, the reversal under 4B1, this is 4B, 4 is there, B1, the reversal under 4B1, they call it as, what is called as permanent reversals. And the others category, they call it as temporary reversals. What do you mean by a permanent reversal and another reversal? Now, what are the provisions which is covered under 4B1? Rule 38, 42, 43, and you have section 17/5. What is 38? In respect of banking and financial institutions, there is an option for the banking or the financial institution just to take 50% of the credit, eligible credit during that particular tax period. I don't remember the provision now. That particular provision, I think it is 37. And it is very much available there. That particular provision, which says that only it is Rule 38. It's very much here. Rule 38 says that only 50% of your credit is eligible. Now, that 50% which the taxpayer does not take, that means now you have to visualize this scenario. Here in this particular case, if this is 50,000 here, that is for a banking company, it auto-populates as 50,000 here. Here, he will show 38 will show 25,000. That means this 25,000 he is not eligible to take, and it is a permanent reversal. It cannot go back and take it. Similarly, with reference to 42 and 43, I told you proportionate credit for taxable, exempted or non-business activities, whatever is the proportionate credit, whichever part that he makes a user entry, which is a reversal, is now actually forms part of a permanent reversals. Finally, block credit, which was reflected as an ineligible credit in under D till 17/7/2022, gets reflected now from 18/7/2022 here from under 17/5 from 18/7/2022. Now, this is the first change that comes in. What is temporary credit that is there? What is temporary credit that is there? Now, visualize scenarios. I'll just throw in 3 provision that is there, which is actually Rule 37, Section 16 2B, Section 16 2C. These are the provision which credit, if it comes under this particular category, it is a temporary reversal. What do you mean by what is actually Rule 37? Now, there is a provision which says that if I have received a supply from, say, Chandrakant, if I have received a supply from Chandrakant and I have not made the payment within 180 days, I have not made the payment within 180 days, I need to reverse the credit. Correct? Now, so there are certain supplies in which I have not made the payment after beyond 180 days. So it gets covered under 37, and let us say it is 1,000 rupees. I am required to reverse it in the month of, let us say it is, we are talking about April 2025. in the month of April 2025. Now 1000 rupees I have reversed because it is, I have not made the payment. Okay, section 16(2)(b) is the example that I gave you, that supply happens on the last day of the month and the supply is received couple of days in the next month, that is maybe on the second of the following month. Now, one of the conditions 16(2)(b) says for taking credit is the fact that the goods and or the services should have been received for me to take the credit. Now, you have to visualize the R1. If the supply happens on, like if the supply happens on 30th of April. Now 30th of April, I would have entered it in the April 2025 R1. Correct? I would have entered it in April 2025. Because it is entered in R1 of April 2025, and if it is filed within the specified dates for an R2B, it auto-populates in, let us say it auto-populates in the April 2025 2B. R2B. It auto-populates in the April 2025 R2B. Now, here is where you need to visualize what I am trying to say. Because it auto-populates, let us say that the amount involved was, say, I think I'll use a different color. The amount involved was, say, 1000 rupees. That is, it is gone, it is pertaining to the R2B, but it is received on only 2nd of May. 2nd of May. Now, because it is received on 2nd of May, at the time when the 2B got auto-populated, the goods or services were not received by me. So, I can take the credit only when the goods or services have been received, which pertains to the subsequent month. So, what I need to do here is, 1000 rupees would have got auto-populated here. I will show that particular entry here. Now, this 1000 here is 37. With 2B, I will show it as 1000. I will show it as 1000. Similarly, the scenario that I explained to you, Rule 37A, in the third part of your GSTR 2B, and I also told you section 16(2)(c), tax has not been paid with reference to that particular R1 has been filed, but with reference to that particular supply, tax has not been paid. So let us say that is 1000 rupees. Now, this is where I want you to understand what I am saying. 3000 rupees have been reversed because of provisions Rule 37, section 16(2)(b), section 16(2)(c). But now, if I, after reversing this particular entry pertaining to 1000 of Rule 37, if I go and make back the payment, that is say on the 200th day or the 220th day or whatever it is, I am eligible to take this credit back. I can take back, credit can be taken back. Credit can be taken back. Similarly, since it is received on the 2nd of the following month, I can take back the credit which I have reversed here, I can take it back here. Now, if the tax has been paid in a subsequent tax period, I can take it back here. The credit can be taken back in this one. So, what happens is, these reversals are called as temporary reversals. For the simple fact that it is not eligible because of some provision in the law during that particular tax period, but it is eligible in the subsequent tax period. Now, to ensure that, now look at it from this perspective. Let's use another color. Because, you know, with this, if I erase, the entire thing will go. That is why I am just retaining it. Please bear with me. Now, look at it this perspective. Or 4A5, let us say, is 1 lakh rupees. Let us say it is 1 lakh rupees. Okay. Now, if you say 4 temporarily reversed in the month of April, I take it back in the month of May. Now what happens because of this edit entry? Because of this edit entry, now it creates what is called as an R2B, R3B mismatch. It creates an R2B, R3B mismatch. Now, because it creates an R2B and R3B mismatch, and this mismatch is just because, it doesn't mean that it should be correct or it is perfect. Because this mismatch is because of the temporary reversals reclaimed, 4D1 has been made available in in the table 4. So that now in 4D1, what does it say? ITC reclaimed, which was reversed under table 4B2 in earlier tax period. So now, if he reflects 3,000 rupees here, it doesn't mean that that is the reason. You need to check it or confirm it, whatever it is, but it indicates now the mismatch of 2B and 3B to the extent of 3,000 rupees could be because of this reason, that it has been claimed back of the temporary reversals. I hope it is clear. Now, this is the change that happened between from 18/7/2022 onwards. Now, from a document perspective, if I were to tell you from the document perspective, if you look at the changes that happened, I did explain to you now the difference between the table 4 till 17/7/2022 and from 18/7/2022. That is what we understood. Now, if I were to just talk to you, I told you about from a document perspective, 4A5 will be invoice plus debit note minus credit note, and also this just for information purpose that when there is a reversal under Rule 43, there is an interest component also that is payable, just an information purpose, that is all. Now, if you look at this particular thing here, if you see here, the first thing is temporary reversals. Rule 37, 16(2)B, 16(2)C. 37, 180 days. Payment not happening within 180 days. 16(2)P, the goods or services have not been received. 16(2)C, tax has not been paid. Now, come to the last person. What was I telling you? I think from going forward, this is the data flow. We have reasonably understood the data flow that is there. But now I want to highlight certain aspects on the system. From a systems perspective, this is only for information purpose. Because many times what happens is, we focus on the theory part. We do not know how the system works. I just want to tell you a couple of things with reference to the system, which is actually a beautiful system that is put in place. Before I do that, I just want to also tell you one aspect. The aspect that I want to tell you is, there is a concept, or there is something which is called as scrutiny of returns. Now, for scrutiny of returns for 17/18, what happened is the board issued a circular somewhere in 2022, is what my understanding was. In March 2022, circular was issued, and it said that there are certain parameters based on which you need to check. Now, the parameters actually pertains to the flow of data that is there. Now, here is where I want you to remember with reference to when we looked at this liability table, I told you that if it is 3.1B here, it will actually flow. It is a zero rated supply. It will actually flow from exports. It will actually flow from SEZ. I think I just missed out telling you, explaining this, so I'm just coming back to it. So this will be table 6A. Amendment 9A, debit note, credit note 9B, 9C, and here this will be 6B, 9A, and this will be 9B and 9C. Now, what is the scrutiny parameter that was provided? It says that if 3.1B is not equal to this table entry, it is a scrutiny parameter. It is something that you need to check as to what is the reason why it does not match. That means there is an edit that has happened. You need to check whether there is a valid reason for that particular edit. So that is what. Now you need to visualize the other aspect. Now that also has been facilitated from a department's perspective, is that in respect of whenever there is a mismatch between this table entry and this, it gets communicated in a form which is called as DRC 1B. I told you about DRC 1B. If you remember GSTR 1, I said that if there is a DRC 1B and a DRC 1C notice, if there is no reply within 7 days or whatever is the difference is not paid back or reversed, then the subsequent R1 cannot be filed is what I told you. So that gets covered as one. So there is one part which was initially coming as a scrutiny parameter. So basically what I wanted to highlight is the fact that whenever there is a mismatch in the data between these tables of R1 with the corresponding tables in the R3B, it is a aspect that needs to be checked. It's a scrutiny parameter. So if you were to put a scrutiny parameter for this particular table, which is 3.1D, here, reverse charge entry, that is, this is 3.1D. Now I said 3.1D, if you recall, it flows from 3.3 of the 2B, GSTR 2B, and I said there is also a user entry with reference to unregistered persons RCN and import of service. This is what I told you is a liability here. Now, if this should be equal to what? This will actually auto-populate into 4A3. So this should be equal to 4A3 plus actually whatever is the user entry which is done for import of service. If this does not match, it's a scrutiny parameter. It's a checking parameter. So I just wanted to highlight that particular aspect that, okay, when you want to scrutinize, it is with reference to the data that is there or there is a mismatch in the data that is there. Now, look at this particular entry. Again, which is this, 17.7. Let's use this particular example here. What I wanted to highlight is, if you see 4AC is nothing but A minus B. I want to now talk to you or tell you about the system that is put in place, which takes care of certain things, from a department perspective or from a perspective that we need not go and check because the system takes care of that. What is it that I'm trying to tell you? Have you wondered, is it possible that A is 100, that is A is 100 and B is 1000? So because of which A minus B becomes 900. A minus B becomes minus 900. It becomes minus 900. So that means there is a negative entry that goes into the credit ledger. It goes in. So in this circumstance, actually what the system is so robust in this case is, in a circumstance where A minus B becomes a negative figure, now what the system does is minus 900 gets added to the liability. And unless this minus 900, whatever is there, is paid by the taxpayer, the system will not allow him to file his GSTR 3B. I think that is a wonderful, at least it saves the trouble of having to go and check with reference to the minus entry. But definitely we need to check if at all there is a minus entry, if there is an interest payable with reference to that. That is an aspect that needs to be checked. I just want to show an example as to how whether it is possible this one. There is something that I saw with reference to an analysis that is this one. If you see here, this is minus 24 crores. This is minus 24 crores, minus 24 crores. Huge amount of money. That is, A minus B is for 24 crores. Now, if this 24 crores is not paid back, system will not allow him to file, allow the taxpayer to file his GSTR 3B. So this gets added to the liability of the taxpayer. In that case, it is again, I think about 74 crores or 7 crores, 34 crores. So it is all minus entry. Now, I just wanted to highlight the fact that the system takes care of an A minus B being a negative entry. Now, table 5 is a table which actually is something that we need to have a look at. It is, but it's one of those tables that, the taxpayer and the department, we pay very less attention to it. In fact, many times, you find taxpayers not even entering those tables. But it is a useful parameter, table 5, along with R2B. The information in R2B with this particular entry, it is a useful information in case we are doing an investigation or an audit. It's just a useful information to see that, to arrive at what is the purchases during a particular tax period. That is, from a supplier, what is the supplies received from a supplier under composition scheme exempt and nil rated, whatever is that, and non-GST supplies that I have received. It is very much along with the R2B entries, if it is there, it is very much possible to check that reasonably this could be the purchases made during this particular tax period. So that is something that I thought was relevant with reference to table 5. Now come to the QRMP scheme that is there. Now there have been many taxpayers that came up with the view that I don't have any supplies during a particular tax period. Do I need to go into the portal, upload the data, or file a nil GSTR? One very cumbersome process. So to facilitate that, the government came up with this one, that using the registered mobile number that is there, the taxpayer can file a nil GSTR1 or a nil GSTR3B by sending an SMS in this particular format, in the format that is specified on this particular screen. Now it will be treated as that, oh, nil GSTR1, nil GSTR3B has been filed. Now there are two ways in which a GSTR1 or a GSTR3B, whichever is there, this is how the screen looks. The taxpayer has the option to either file it online or you can do it offline. What do you mean by online or offline? Whether if you click on online for a GSTR1, here I'm not able to show it because it has already been filed. Here you see the difference between online and offline. If the GSTR1 is an online one, what you need to remember is that if you remember the example that I used yesterday, I said I had 1,000 invoices. I had 1,000 invoices is what I said. Now, if you want to use the online method of filing your GSTR1 or GSTR3B in respect of GSTR1 at least, is that if the number of records exceed 500, the system does not allow you to use the online method. You have to use an offline. There is an offline utility which is provided free by the GST portal, a wonderful utility again which needs to be highlighted with reference to the system perspective, based on which the offline utility is, I think I remember was that it was such a robust one that last I remember was even up to 20,000 records it can upload using the offline utility. So the offline utilities have been created for all the return forms that are there. Now for the GSTR1, what it does is from the offline utility it converts it into a JSON file, and the JSON file gets uploaded, and the respective tabs that we saw, if you remember the GSTR1 tabs 4A, 4B, 6B, 6C, whatever is there in the JSON, the detail that have been entered gets it is visible here in the portal. It gets updated. In fact, if you want to download it, you can view it also. You can view it separately in the portal. There is an offline utility is what I want to highlight. So, and you need to remember that if the number of records is beyond 500 records, the system, the taxpayer has to use the offline utility only to upload his data. Even if it is less than 500, he can use it, but the system, he also has the option that he can use the online method to do it. Now, I just want to also now touch upon one aspect that is there, which is actually, I told you about the system being robust enough to take care of, if 4A minus 4B is a negative figure, what the system does. Now, one of the things, if you remember with reverse charge, is the fact that whatever is a reverse charge liability has to be paid through the cash ledger only. It has to be paid from the cash ledger only. Now, I just want to highlight the fact that, the ledgers that are there in place also is robust enough to ensure that if there is a liability that is reflecting in 3.1D of your GSTR 3B, it ensures that it is paid from the cash ledger. So I just want to highlight that. I'm not going to spend too much of time, but I just want to show it to you. Now, this is where it shows. And here, if you see here, 19,730, 2,567, 2,567 has been shown under 3.1D. Now, the system should, when the taxpayer is going to file this, the system should actually take care to ensure that this 19,730, 2,767, 2,567, 2,567 is paid from the cash ledger. Now, this is the input tax credit, all that is one. I'm just trying to also highlight the fact that there is the ledgers that are available for a taxpayer. There is an electronic liability ledger. Now, the liability ledger has two parts. One is a return-related liability, and it has other than return-related liability. Whatever is the liability that is there in 3.1, whatever is the liability that is there in 3.1 actually it creates a liability in part 1 of the electronic liability ledger. If you remember, 19,730, 2,567, 2,567. These were the entry which was other than that 3.1D entry. 3.1A, 1B, whatever amount was there is what is there here. If you look at it in the electronic, this is the electronic liability ledger, part 1 of the electronic liability ledger. It creates two debit entries. It says other than reverse charge and it says reverse charge. It creates two debit entries in the liability ledger. Now, thus ensuring that whatever is the separate liability which is created with reference to the reverse charge, it has to be paid only from the cash ledger. Can you see? So that is another beautiful feature that is there in the system that is there. So it ensures that if there is a reverse charge liability, it gets paid only from the electronic cash ledger. Now this is the cash ledger that says, can you see here, there is a credit of 9,730 and there is a debit here. There is a contra entry that happens. Similarly in the credit ledger. Now there is another aspect that I just want to highlight. These are all just for information purpose. When you come across this, at least you're aware, okay, you heard about it. I just want to tell you there's something called as a PMT09. A PMT09, you have to visualize this. Now, there is a major head and a minor head for against ANS1. So IGST, CGST, SGST will be, there will be tax, interest, penalty, fees and others. Under that you have IGST, CGST, SGST and others, and cess. Now what happens is, the taxpayer had a problem. When he deposited the money under the tax head pertaining to IGST, and it so happened that in a particular month, he had balance of IGST in his cash ledger, but he had to pay CGST amount. Now till I think about 2019 or 2020, it was till about 2020, I think round about the COVID time, that is when it was rectified. Now till that time what happened is the taxpayer had no choice other than now to make a fresh credit for CGST. Now despite the fact that he had the sufficient balance under the IGST head under tax, he could not utilize it to pay CGST amount. That is what is the problem that happened. So now to facilitate that, the GST portal, the law also created a form which is called as PMT09. It facilitated transfer of whatever balance is there in a major head to a minor head or whichever head it was there. It facilitated. So PMT09 was that. Now I think we come to the major flow with reference to the data flow with reference to R1, 2A, 2B, 3B we have done, and I just want to, because there's not much that I have to say with reference to GSTR 9, but I would just like to touch upon this GSTR 9 and tell you about the data flow, how it happens or what actually is there in the GSTR 9. A GSTR 9 first of all is an annual returns. Now you need to remember that when you say annual returns, it pertains to a particular financial year.
We conclude today's session. In the next episode, Rajesh V. George will focus on annual returns, a vital concept in GST.